Hi, this is Charlie giving you Wednesday's market commentary. There's really not going to be too much to say regarding commentary today, but we did have a question come in from through the Facebook page from Lilith regarding brokers, and so I thought I'd just field this one off first, this question, and then we'll go into the market commentary. Now, our question was, do brokers take the opposite side of your trade? She said that she's been hearing about that brokers do this, and what does it actually mean? Well, with a retail broker, then what they essentially do is they end up becoming a market maker themselves. So what does that actually mean? Well, what it means is when you buy, so let's say you buy at whatever price in the market, your buy order doesn't actually go through to the real market. What it happens, it just comes straight through to the broker. So let's say we've got the market over here, and then you've got your broker in the middle, and your broker may, especially if they're something like a spread better, it's not a real market spread betting, so they just they will mirror the market prices, and you will buy and sell based on the prices that they're giving you. But of course, when those orders come through, they just come through to your spread better, and the spread better then has a choice of what to do with your trades. Now, they can either just take them onto their own book, or they can pass them on into the market, and they can pass them on into the market by effectively hedging. So if you've bought and they then need to pass it on to the market to ensure that they are hedged. So that, if you buy, price goes up and you make £1,000, they've got to pay you £1,000. Well, by them hedging that into the actual market, that means that when they have to, so therefore they would also buy into the real market, so then they would make £1,000 as well, which means that then that can then just be transferred to you. They then make their money on the spread. Okay, now most spread bettors will do this though. They'll do an element of hedging, which is what I've just said, but they will also just keep some of the trades on their own book. They won't actually pass it all into the market, and that is what is termed by people saying, "Oh, they're taking the opposite side of your position," because essentially what they're doing then is they are, because they're not passing it on into the market, they are literally just saying, "Okay, Mr. Customer, I think you're going to lose. So what's the point of me passing it on to the market and then making £1,000, passing that £1,000 on to you? Why don't if I think you're going to lose, I'll just carry that risk myself." A bit like a casino would do when a punter goes and sits down at the roulette table. They know that okay, that punter may win on occasions, but they know that in the long run that customer will probably lose, and so they'll then take a view and say, actually, we'll just take this trade ourselves. We won't pass it onto the market and hedge because we think that this customer overall will probably lose money, in which case that's fine because we'll just make all of that money on top of the spread as well. So that's essentially what they do, but they don't actually sit there and say, oh right, we have got XYZ customer here, let's take the opposite side of their trade, or essentially just take it onto the book. Well, they'll just have a collective, so they'll hedge so many of their positions and not hedge the rest. So that's what they do as a collective. So they're not actually sitting there looking at your trades necessarily. They are watching all of their customers' trading activity because they obviously want to make sure that they haven't got any customers who are making too much money. But certainly, and if they see anything untoward, they want to keep an eye on that. But certainly, they don't tend to be taking the opposite position of your individual trades. They just look at their book as a whole. So let's say there's 1,000 customers and who are all trading the euro, and 800 of them have gone long, 800 have bought, and let's say 200 are short. Well, they need to and hedge that exposure, because if 800 are long and they weren't to hedge any of that, and the market went up, they would make money on the 200 people that have shorted, obviously, but they would then lose money net on this trade. So they would then look between these two overall positions to hedge something in the middle, and that's what they would look to do. So, and leave some of it. So they would leave some of it. So because they know that in the main 80% of their customers will lose money, and so but certainly they have A and B books as well. So they'll try and categorize the customers who are fairly consistent and those who are less consistent. Anyway, I hope that gives you an idea of brokers going against you. They don't literally go against you. It's just them hedging their own book and not hedging the rest of their book. It's as simple as that, really. Right, okay. Hopefully that makes sense. Any more questions on that, come back to me. Right, Euro is going sideways. Nothing much to say there. It's a daily chart. Nothing much to say on Euro, so let's scrub that one. Aussie dollar. Now, I was trading the Aussie dollar last week. I thought it was going to turn and come up. Obviously, it didn't. It came over and stopped me out. But I'm still looking at this Aussie dollar based on the weekly chart, that it's just playing around down its lower band here at the moment, and it's got divergences in the background. So on the weekly time frame, so I'm still keeping my eye on it. It's certainly going to have got some work to do to come back up before I can get interested in it again. But I'm keeping my eye on it because before you know it, if it was to get back up into the upper 90s towards 91, then I'm going to get interested, because I know that then we've got 92 and 93 as good targets for it. So I'm still keeping my eye on that, but that's all to say about that at the moment. I'm not trading here. It's not traded today at all, and I can't see myself trading unless something sets up this afternoon. It just doesn't look likely. Had a few points out yesterday's markets in the afternoon, that was all. Let's have a look at the pound dollar. That's creeping its way down towards this lower trend channel line. So and that's where it's going to be interesting, is once it gets to this trend channel line. So watch out for positive momentum on that day. If that's on Friday morning, you never know, I might even be trading that, because by the time it comes down to here, I'd be expecting a bounce, and then it's around there. If it had positive momentum, then I'd be looking to trade that. And what else have we done? Dollar yen. Dollar yen, it's rolled over from this upper trend line. So that's not surprising. Coming now down to the lower one in this pennant formation, and I think it's just going to carry on winding itself up. So it's going to get more and more tricky to predict what it wants to do until it actually breaks out in one direction or another. So we'll keep our eye on that one. But remember, we must keep mindful of the fact that ultimately it's going to want to come down to that lower band, which is down around about 95 on the monthly chart. So it has got that. So I'd quite like to see it come down, but it could play around for a bit yet. And S&P, let's go to the S&P. Lastly, it's come down to this trend channel line, as we can see here. Big long trend channel since November, December of last year. I would expect some sort of bounce to be kicking in soon on that one, because usually they do. Even if it dips below it, then I'd expect it to come back up to it. So it's had a good run down, and I don't think this is necessarily over yet. I mean, at the moment, it's just having this wonderful, beautiful trend and a nice trend channel. Probably it's going to break out that trend channel for a bit, and then we'll have maybe a push later on in the year back up again, but we'll have to see. But for now, I think there's probably overall still some more downside to come. Remember those divergences I talked about last week. Right, I shall leave that with you. Live trading on Friday.